Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro-US dollar FX for Thursday, February the 23rd, 2012. Well, a continuation of the trend to the upside today, and we have a candle that's made a higher high and a higher low. A very large green-bodied candle, and that suggests that the buyers have closed this market with control. They've made a very substantial amount of net bullish progress on the day between the open and the close, and they're strongly committed to taking this market higher, very strongly committed throughout the trading day, where they've opened down towards the low and closed up towards the high. A bullish breakout above the cloud, and that's very significant for this market. Previously we saw the market test above the cloud on 3 occasions, and price action was rejected from there, so sentiment has changed in this market, and there's some bullishness coming into this market now. This is a buy signal in big picture terms in Ichimoku. The market is now bullish in the long-term time frame, and this is the type of breakout that you like to see when we have a breakout, a very bullish breakout. Now, just because we have a bullish breakout like this doesn't mean the market will go on with the move, and we can see back here where we had a similar type of candle, and here where the market relaxed for a while and then even retraced, so there is a possibility that that will happen. The market will be interacting with a very large zone of resistance, and we can see the shadows on the top of all of these candles where price action was rejected, and there is a possibility that the market will do it tough trying to trade up through this area, which extends up to 136.15. So we will need to see quite some bullish upside momentum in this market for it to trade up above that level. So it wouldn't surprise to see some of this type of trading with large shadows and the buyers continually losing commitment in this area. In terms of the other Ichimoku indicators, we are trading above the Kijun Sen and the Tenkan Sen, so we have a bullish market in the second and third time frames, and bullish in or the market is bullishness in all 3 time frames is confirmed by the Chikou span by trading above the corresponding price action. So for the next day's trading, let's watch how the market reacts around this level. If we do see some indecisive trading, there will be a possibility of a retracement. We should look to support down around the 133.20 level where we saw previous resistance, and then certainly down around here to the where the top of the cloud is now trading, to 132.39, and that has strong potential to act as support for this market. But let's watch the high of this current candle. If we are going to see it continue to this bullishness, we would like to see that high taken out in a bullish way. Watch the lower time frame charts, but we do have this large zone overhead. Next, moving to the Aussie dollar US dollar, and the candle we're analysing is the second last candle here. The final candle we see here is still forming, but here we have a change of sentiment in this market as well, and a very large green bodied candle. It's been some time since we've seen a body of that size, and it was probably about 2.5–3 weeks ago when the market was testing up above 108. Here today we've seen the buyers make some net bullish progress, and quite a large amount, as opposed to the sellers over the previous 3 or 4 days, and we've seen the buyers close this market with control and show some good strong commitment. The market tested down to the 106 level that we highlighted yesterday, that was support for the previous day, and the market found support down at that level. The sellers lost commitment down to that, around that level, and the buyers came in quite solidly, so that's a very important level for this market, 106. To the upside, however, we do have strong resistance, and the resistance begins at about 107.52, which the market will most likely interact for the next trading day, and then up to 108 and 108.43. So some very strong resistance overhead. In terms of Ichimoku, we are still trading above the cloud, so the market has an overall positive bias. We are still trading above the Kijun Sen, and the market found support at the Kijun Sen here on these 2 occasions. and is just trading above the Tenkan-sen, so technically bullish in the fast time frame as well, but quite neutral because we're trading very close to that. But technically we're bullish in all three time frames, and that's confirmed by the Chiká span that is above the corresponding price action. Here we can see the market in a very strong second time frame uptrend previously, breakout above this congestion pattern, some sort of a symmetrical or ascending triangle. But now for the previous day's trading, we had the market take out the swing low, which gave us a series of lower peaks and lower troughs, and confirmed a second time frame downtrend. As I mentioned yesterday, however, the market failed to close down below there, and that was quite significant, with the sellers losing commitment around that area. And today we've seen this bullishness coming back into the market. Now if we do see the market capitulate around the 107.52 area with some sort of an indecisive candle, there could be a possibility of the market trending down once again in the first time frame and testing back down to 106. So we do need to watch how we react to that 107.52 level. So for the next day's trading, obviously watch 107.52, but if we do see the market come off again, watch the 106 level. Next, moving to the US dollar Japanese yen, and here we see a change of sentiment in this market. For the first time in quite some time, we've seen a relatively large red-bodied candle. Previously we had quite a strong uptrend in the first and the second time frame with some fairly large green-bodied candles, with the buyers making very solid net bullish progress, and some doji type candles in between where the market really didn't correct. Those indecisive doji type candles really had no effect on the market in the previous few weeks because the upside momentum from the buyers was so strong. But here, quite a change of sentiment now with a relatively large red body candle that we haven't seen for quite some time, probably about a month or so since we've seen that type of candle. This does set the market up for a potential change of trend. We haven't seen a change of trend yet. Technically we are still in a first time frame uptrend, and we haven't had a lower high and a lower low. But this red body candle is suggesting that these buyers are no longer supporting the trend to the upside. The sellers are now attempting to take control. They have taken some control for the day, although only fairly weak control by closing just below the midpoint level, but they have made net bearish progress, and a relatively large amount. This is a potential reversal pattern, Japanese candlestick reversal pattern. It's a harami type pattern, and that means that we do need to watch the low of the current candle. We will require confirmation of that reversal, and that would be a lower high and a lower low. In terms of Ichimoku, we are trading up above the cloud, and we have been for some time. We had a bullish breakout and then follow through when the market traded above the 78.27 resistance. So a bullish market in big picture terms, and bullish in the medium term and fast term time frames by trading above the Kijun-sen and the Tenkan-sen. The Chiká span here is supporting the bullishness that we're seeing, but in the terms of the short-term dynamics, the battle between the bulls and the bears in that short time frame, the buyers are no longer supporting the trend to the upside, so there is a possibility for a change of trend. Now the Kijun-sen has turned flat, and very often when that turns flat we do see the market attempting to retrace back to that level, and that represents equilibrium in the medium term time frame, and markets can't continue trending with very high momentum for a long period of time. So it's likely that this market will relax or even retrace a fair bit of this uptrend. So one thing that we could do, and we don't usually do it with this with the Ichimoku, but you could place your Fibonacci calculator on here and look at the key Fibonacci levels for a potential change of trend to the upside around those levels for the market to continue back with the trend to the upside. But also look to some of these important support or resistance levels. One of them is 79.52 from a previous level. Another is at the Tenkan-sen, which is trading at 78.87, and that is a very strong area of potential support, and certainly at the 78.27, and just below there at the Kijun-sen at 78.20. So let's watch how this market develops. If we do see a test down below this low and a lower high and lower low, we could trade to lower levels. Above here we do have the resistance around 80.22 extending up to the swing high about 80.40, and then above there we have a large zone of resistance that extends from roughly 81 up to about 82.20, so a very large zone of resistance overhead where there was some previously very strong price rejection. But we do have a potential reversal pattern and we need confirmation of that.